I guess so.
Yeah, no, so over to you.
All right. Thank you. Thank you so much, Aditya. Thank you for the nice, kind words. But very briefly, in 10 seconds, I've been in the family office space dedicatedly now for 8 years now, and have worked in the investment space for over 27 years of my life. Predominantly, all of it in the investment space. I've worked in every part of investments and turned over as a family office advisor in 2013 and 14. The Cervin, the company I set up, is my old team, which we have worked together, and the team has, expertise in advising now over 80 families in India across almost $3.5 billion of financial assets, and this is only financial, not their promoter equity. So that's what our background in this space is. Uh, Let me, some of you may have joined, sessions which I've done earlier, so you may find some of the things a bit repetitive. But things like the basics about managing the governance platform and investment platforms are quite similar, so they won't change. But I'll make sure that I'll give you a few more instances and examples which you may not have heard from the last sessions, but predominantly you might find certain slides to be very similar in nature. So I'll just start my. I hope everybody can see this as well. As the topic goes, it's all about creating a governance and investment platform. And we do, as advisors, we do a lot of functions for the family, but these two are primary function. And I'll tell you the reason why these two were chosen to be used in this master class. Uh, you must have heard statements like this made by everybody who's connected to the fund, the family office space, is that beyond the third generation, the family wealth starts getting eroded, family business starts getting into a weaker footing. But on the contrary, you do have businesses which have gone across multiple generations as well. So it's not a norm, but in most cases, after the third generation, you do find a lot of changes in the way family businesses and families themselves behave. So if you look at the slide, the first generation is all to do with entrepreneurs. The whole enthusiasm about setting up businesses, working hard, maybe sleeping less and all, because the agenda is to set up that business. From the second generation, there are the kids who take the business forward. They may give it a new direction, but in most cases, they generally toe the family patriarchs or matriarchs or the initial direction for the family business. Third is even a bit more complex because you now have grandchildren. So there are coterie of cousins who might be part of the businesses, who will be working in the business, not working in the business. After third and fourth, I think the number of people who get indirectly related to business families are quite large. So you require very different handling at each stage. So as the business goes across generations, we all know the complexity and everything starts getting a bit more difficult to handle. I'll not call it a problem, but yes, it's a challenge which has to be overcome. And this is a more of a interpersonal, mental, and structural challenge in the way people behave, people talk to each other, meet each other, treat each other. It's nothing to do with legalities. Legalities are better covered under things like stockholder agreements and shareholders agreements and all this kind of stuff. So let's see why businesses fail and why these two governance and investment platforms are important. Very naturally, if the business fails for whatever reasons, the competition takes you over, or you just cannot keep up with the competition. The demand for your product is not there. There are frauds. There can be anything, any number of reasons why a business can fail because the business itself fails. So I think we'll keep that apart. That will require a very different masterclass of why businesses do fail. But the second biggest reasons where family businesses tend to erode is family conflict, which causes multiple factors in pulling the business down. It can be just legal cases, feuds regarding ownership, feuds regarding being biased and all that kind of stuff, which actually just takes in a lot of negative connotation. So when people like us, talk to a lot of families, our first point of call after understanding their businesses are to understand the interpersonal relationships, the any kind of origin of conflict which might already be there, or we can see it in the horizon. So that's the second reason, and the third reason is the family wealth is either not protected enough, or sometimes it's not adequately grown. And we'll talk about this a bit later, but just to give you an idea of why it is there, and there is one letter at the end which says distributed. Now I'll tell you the difference right here. So protection basically means that your wealth was outside your family business, not inside the family business, because family business is a risk class by itself. It was not protected. Maybe proper care was not taken in his investments, in his holding structure. There were legal issues which which affected the wealth ownership of the family. And also adequately grown means basically the lifestyle cost of families were increasing, and they had to rely upon this wealth, and that was not adequately growing to make sure that their actual cost of living, their standard, their luxury living, everything is taken care of. Or there may be other expenses which have to be catered to. And finally, distributed. Now, liquidity is a major problem with many family business owners, so we'll touch upon that. Because you may have a very beautiful, amazing performing wealth portfolio, but if the family members have no cash in their pockets to do anything, there will be issues in that family business. So let's, I think, take one of these points together, as the topic is about governance platform and investment platform. So talk about the governance platform first. Uh, First of all, conflicts. I mean, these are very natural. Wherever there are people, there will be conflicts. Even the best teams have, conflict. Conflict, if managed well, it can be a positive factor as well. But if it's let loose, not planned for, or just turned a blind eye, it can actually erode into a volcano, which can actually take a lot of things down along with it. So idea is to understand what conflicts, and hence we can understand why do you require a governance platform for a family. Governance platform sounds very esoteric and all, but frankly, it's just basic set of rules of how you engage with the family, which will come to be seen. So bear with me on some of these boring slides which may come, but these are very basic slides that we use to inculcate the knowledge of family governance. So let's understand what conflicts are. Conflicts start from usually about the whole question of money. Now, the money can be either they don't have it, they're not in their pocket, they don't agree with the risk taking of that family, they don't agree with the areas of investments where they should be investing, family should be investing, who controls wealth. So these are all, the perspectives are all around family wealth. It can also include sometimes the shareholding shareholders part of it. That there are no exits available to shareholders, hence no distributions or liquidity, or there is a valuation issues in the shareholders because multiple family members are now involved in ownership of that family who may not be working in the business, so they may want to exit, they're not able to exit. So things like that do happen. Second is the difference in lifestyles. I mean, even between two brothers, even real brothers, you may have very difference in lifestyles, and hence expectations are very different inside the family. So conflicts may arise about even as a basic things about what kind of a car an individual is wanting to buy using family wealth, or what kind of a house, or where the holidays are happening. So as I mentioned, there are expenditure mismatches which we are seeing right now, which can be seen by in the space. So there are personal choices. For example, one brother may want money for philanthropy, the other may not, because for one brother, philanthropy is part of his giving, but for the other, it's not that important. So personal choices regarding how do you live life, how do you use your money for your passions, everything can also cause conflict. Third is the fear of losing out. In most cases, when we work with families, sometimes the fear of being left out, the fear that they may not be adequately handled or adequately remunerated or adequately safeguarded from any actions, it's just a fear which increases these conflicts. And fears will arise if the family member is not close to the family business. He may be a cousin who owns some shares and may be part of the broader investors in the business or shareholders in the business, but doesn't have a handle of what is happening. So there's a fear of losing out, that what, you might be missing out on what business is doing, what business is getting into, any insider stuff that the family members know that this particular family member doesn't know. So there are constant fears which keep on playing with minds. And fourthly, very importantly, uh, biasness. Again, they may be actual biasness, or they may be just fears of biasness, depending on the communication of the family. If it's not communicated well, the person not communicated to may feel biased about it. But those are the structural fears where conflicts can happen. Conflicts doesn't mean that it goes to a blow by blow kind of a event happening in the family. These are just subtle conflicts, usually behind the curtains, but they actually blow up into the public domain if it becomes very complex and the money involved, business side involved are pretty large. So sometimes this linen does get washed in public, but in most cases it's usually managed behind the scenes using advisors, senior advisors, or confidants of the family. So these conflicts do exist in the market, in the family business space, and I've shared this many times over these many stuff. I mean, this is the basic structure with many people who work in this space recognize this, that the conflicts arise because the family members have very different roles to play in the whole ownership, the structure, the whether they work in the business, do they own shares, are they part of the family. So in some places, for example, this area, they are part of the family and they are also having an ownership of the company. That means they have shares, but they're not part of the business, so they're not working in the business. Whereas some cases you may not have ownership, but the family members may be working in the business. So the expectation of people in this shaded area compared to this shaded area will be very different. So when you start interfacing with the family, and this process takes a lot of time, and we sometimes spend 6 months to an year with a family understanding the whole family dynamics, because it takes time. Nobody wants to talk. Sometimes people don't want to be honest about it. You have to coax that thing out from these individuals. So there are various types of family members in the whole fray. So family members who are owners but do not work in the business, family members who do work in the business but are not owners, or all three. Family members who own the business, who have ownership rights, and also are working in the business. That's this area in the middle. Now these are the people who are closest to the business. They are part of the business. They are hold shares. They are close, so they're usually more safe or secured. But people who are outside this core zone may have certain fears, which will have to be handled adequately in time. So as I said, there are so many different types of stakeholders in the family business that you have to be very careful about how do you deal with some of these entities. Um, to be very honest, you find in most family businesses one of each of these segments that you see on the left hand side. Some, even including people, rather employees who own the business as well, but are not a part of the family. So they're the external professionals who own the business. Now, conflicts may arise about how the family thinks the external people should be handled compared to the family members. Should there be biases? Should not be there be biases? But maybe both hold the same shares in the company. So there are multiple such complications in when you actually start working with family businesses. And frankly, we may have worked with 80 families, and maybe we have interfaced with almost 50, 60 more purely on the governance part of it. You realize that every family, it may come out in a very different way. It may be understood in a very different way. And to be very honest, it has to be handled in a very different way as well. So no one solution for a family can work. And this requires a lot of EQ rather than IQ in individuals to handle this stuff. So I think that's a big challenge for advisors, and even a family themselves are looking inward and trying to set up their family governance platform. This is a space they will spend most of the times understanding the nuances of each and every type of stakeholder in the family business. So challenges do crop up for families, as I said. Uh, some of you in the audience may be working with family businesses themselves. Some may be family office professionals. Some may be just advisors. Some may be investment people. Some may be family members who are also on the call. Thing is that the biggest challenge with matriarchs, or the karta of the family as we call it in colloquial terms, the challenge is obviously to build the family values. And I call it a challenge because usually it's not that easy over many generations to build those family values. And the reason I build the family values here is because many type of conflicts can actually be handled if you have a very common set of family values which are understood and accepted. Forget being written down on paper and signed on. Unless they're understood and accepted, it's a challenge to instill those values. Grandfather and a grandson may have very different set of nuances regarding the environment they were born into, the kind of wealth they were born into. Hence, their priorities might be different. And to keep that family values instilled is a big challenge. So when you start approaching the concept of governance, you start having these challenges. Second is how to make sure that the family image is also taken care of. So another challenge for business families beyond the family values is how to control their family's image. As I said, sometimes the linen gets washed in public, so they have to be sure that this doesn't reach the public domain and is handled before that? Are there any disciplines that need to be built up? As I said, fears, conflicts may arise because of lifestyle issues. So, are there any rules and regulations to be built for the family? How do they get built in? It's not legal sometimes, to be able to build in that. And how do these actually, conflicts get handled? Is there a process of handling it? So, conflicts will be there. They may arise because of actual difference in opinion or some fears built into the family. The older generation wants to instill family values to make sure everybody thinks as a unity, as a united team, but it's a challenge. uh, Social image is a big challenge for family businesses. Sometimes it can affect their business as well and their business valuations. Thirdly, families have to maintain a kind of a discipline. How do you ensure that discipline also instills into the family? And fourthly, how these conflicts get managed, if they do arise, and how do they manage inside the generation or intra-generation or intergeneration challenges can also be happening. So these kind of things have to be handled. Also, as I said, different stakeholders are there in the family business. Some are owners not working in the business, some are working in the business but are not our owners. So how does that extended family is communicated, their expectations are met, is also a challenge for a family. Decision making, who is part of the decision making process? It's just the board of directors for a company, but what happens to a family? Do you have board of directors for a family? These things also get a bit challenging at times, because again you may have issues of fears propping in, that if I'm not part of the investment, part of the decision making group, I may lose out on some key information. I may not know what the family is doing or the family company is doing. And again, lastly, and not the least for sure, is succession. Challenges about succession as you go from one generation to another. Who takes on the business? Who gets what kind of a role? Everything can't be spread out evenly among all the cousins in a family, because everybody comes with a different kind of a background. So things like that affect the family's understanding of conflicts. And there are many such conflicts we can think about. There can be personality issues. I'll skip a couple of them because, as I said, they're quite. So how do you actually build this governance platform? And what is actually a governance platform? It's just a name that you hear very often, but very realistically, family enterprise governance, and I'll read out to you, is refers to the collection of mechanisms that are, hello, mechanisms that enable family decision making and implementations of policies concerning the management of family affairs, its businesses, related entities such as its foundation, the philanthropic foundation, its family office, in a manner that meets the missions and goals of the family. So, collection of mechanisms, decision making, management of family affairs, mission and goals of the family. They can be through formal structures, processes, rules and regulations, agreements, any kind of documents, legal, in most cases, non-legal documents, which can actually form part of this governance, platform. What are the tools? How does a family approach a family governance, or a family advisor usually approaches a family governance? So beyond this whole conversation with the family, understanding where the issues are, which is the biggest step of understanding where the issues are today, uh, any historical ramification of any issues in the past, and go looking forward. The family also has to look at what kind of issues can prop up. For example, when the next gen comes into the business, will there be infighting again, between cousins, or will there be a kind of a friction between the professional managers versus the family members who are joining as businesses? So you have to foresee those issues in the family as well. And hence, you build the whole governance platform. Basic tools that we built upon. Firstly, is the family constitution, the overarching document which defines, how exactly the family governance platform will operate, who will be part of what kind of decision making, what processes, regulation. It's all captured in the family constitution. Uh, the key tools about that is things about family councils. If you have a very large family, imagine a family which is fourth generation, and we sometimes meet these families, and they're like 32 people to 40 people sitting in that boardroom, because that's the whole family group including the fourth generation. So in those cases, how do you speak to them? Whom do you speak to becomes the question. So there's a need for family council, and we see how family assemblies. Now, most of these 40 people will not be meeting occasionally together. They They may be meeting in small groups, which also incites sometimes groupism between large families, because you start liking a smaller group in the family. But family assemblies as a whole, extended family, rarely happens in most cases. Some cases it happens naturally over festivals, but in some cases it doesn't happen at all. And especially the problem arises when you go out of India and the geography is spread over continents. How do you ensure that kind of communication? And succession, as I mentioned, very importantly, uh, succession can really cause a lot of conflict, and has to be handled with a lot of care, because this is not something you can do it overnight. It sometimes takes almost 5 and 10 years of planning of succession to even prepare the person who will succeed, who will get the succession mantle, for the family business. So these are the broad tools that most of us work for. Yeah, we can give them various names. Some people might say family constitution is an overarching document. Under that, you will ensure that there are family councils, assemblies, succession plan, rules, regulation, processes. Is how you want to look at it, but ultimately the tools remain the same. So let's see what constitution is all about. Is it a legal document? No, no, it may not be. In most cases, it will not be. It's basically an accepted document by the family. And I keep on telling a lot of families, just by making a constitution doesn't mean that you have all the solutions, everything is right. Unless that document has been accepted and absorbed by the family members, the extended family members, and the key family members, and accepted by heart and not just by signature, it'll have any kind of a value. So the onus of a family or people like us who advise families and their family offices is not to do just to make a document, get it signed and out. No, that's not the case. Sometimes our relationship with them even goes much beyond once you actually put a constitution in place. Uh, how that constitution is understood even after everybody has absorbed it and signed up on it. So family constitution is just a document which puts out rights, values, responsibilities, some rules for all the stakeholders in the family business: owning, not owning, working in the business, not working, not even connected, or absolutely disconnected to the family business. People can be from any background, and provides plans and structures to deal with situations. Very importantly, if this happens, how will the family react? If this happens, how will a family react? uh, and these are usual instances. Just to give you a couple of examples, as I said earlier, if the conflicts arises, where it will be managed so that it doesn't come out in the open. If there's a media issue, for example, one part of the family gets negative media, or family business gets negative media, what will be the process inside the family? Who can talk? Who cannot talk? What kind of statements not to be made? What kind of media not to be, supported, not supported, or given engagements to? So this all gets captured. And frankly, I've seen a family constitution of as small as 2 pages to as big as this thick book, bound books which are there for larger families, which actually define quite a lot. Now, is a small one better than big one? Frankly, there are basic tenets of family constitution that you need to cover, but beyond that, you can have a lot of explanations and sub clauses and sub clauses, just to make sure that there is nothing left to gray. You can make it as detailed as possible, but the key part is it needs to be understood. And what does it contain, very broadly speaking? It will contain the mission of the family. Like you have a mission of the business, there will be a mission statement for the family. Now, mission statements are very personal statements, need not be guided by advisors. Doesn't matter if it sounds esoteric, doesn't sound esoteric, but ultimately it defines, what the family is together for. What is the intent of the family? What does it want to tell the external environment about what the family means? What does it family indicate when people from outside view the family inside? What are the core values? You might hear our core values are, respect for individuals, or respect for life, or our core values is about sharing wealth with families and our ecosystems. You can have multiple such things, but do remember that if you don't need them, don't write them. You don't need to have a mission statement. You can just write about that our family is, as basic as our family is very that you call sensitive about issues around equitable distribution of wealth among the family members, or among the ecosystem that our family business works in. to take care of the environment can be one factor, to make sure that we take care of the employees of the family business, of the family itself might become linked to the welfare of the employees in the family business. You can have, we've seen so many different kind of statements being put there, broad guiding principles for the family, and some family history, about how the family came into being, how the family has grown. It just provides you a kind of a backdrop to providing that constitution. uh, it also talks about the structure. When I say structure, about things about family boards, think about how family boards will be done, and I'll talk about these family councils to be set up. Is there a need of a family foundation? Will the giving activities of a family go through the family foundation route? Will there be committees? Sometimes you have, I mean, you can even have compensation committees for the family. Now this can be part of a family business council, but if it has to be kept in private, and it has to be held handled by a very small number of people from this maybe 30, 40, 50 member broad family. Sometimes committees are formed. Committees are usually short term in nature. Family councils are longer term in nature. Uh, so, and family assemblies I talked to you about, it's just the meeting of the family once or twice a year in a proper way, where they exchange. There's a lot of communication which goes from the people who are close to the family business about what is happening in the family. There even talks about what is happening with the next generation, how are they being taught, tutored, mentored, what is happening with kids, their schools. I mean, you can share a lot about families, and unless they share and they become part of each other, they will never have that kind of sense of unity. So family assemblies become very, very important. uh, Recently, we were hearing a very large corporate business owner out of Africa, and he said, look, for example, as part of our process, if we actually travel to a different country where a family member is residing, we make sure we live with the family member, to make sure that the next generation also talks to each other, because if they're living in two continents, chances are that they may not meet very often. So things like that get built into the structure of the constitution as well. There can be procedures. When will the meetings happen between family members? When can assemblies happen? What kind of communication each individual of a family can expect? What will be shared with each family member, depending upon the seniority, the level of which generation the individual is part of? How expenses and budgeting will happen for the family? Is it a common pool where everybody gets a fixed salary, or there is so-called pocket money given to individuals? Are there any budgeting for large expenses? Because things like, whenever a kid becomes 18, he is bought maybe a car or a house. How does that happen? How does that happen? Who will take a decision around it? What can you buy? What can you not buy? So that this whole, if I talked about earlier about lifestyle differentials causing conflict, so making sure that all these large expenses are taken care of. Things like funding new ventures. What is the process if a family member comes to you and says, I don't want to work in the family business. Actually, there may not be space to work in the family business. I'm interested in something else. Can you fund me? How do you counter to that? Things like that can also be discussed. uh, it all depends on what expectation family has, that what can cause conflict in the family. Not knowing about the business, which is about communication, not getting enough support to live a lifestyle, expense and budgeting, family assets. Can somebody sell your family home, not sell your family home? What are rules around it? Funding new ventures for family businesses, next gen development. How will the next gen get mentored, tutored for that matter? How is leadership inculcated? Do they go for a course? I mean, course is the course, but do they have to say work outside the company for a while and then come in, join the family business? Or they have to actually go for leadership, leadership camps, sometimes at global locations, to make sure that you inculcate basic tenets of leadership. Things like how can they enter the business? Things like how can they exit the business? Can they exit the business? I know a couple of families, you're not allowed to exit the business. So if you actually exit the business, that you're on your own. You can do something on your own, but you'll not get support for the family. Now, it's not our job to judge. It's that family's prerogative, but that's something they've built. But sometimes, yes, families do have to look inside and say, is it viable in today's day and age? Because if you're in the fifth generation and you're a lucky family business surviving that, you might have 100 family members. Not everybody wants to work in the business, so there will be people leaving the business. So I think things like that have to also be understood as we go from one generation. New family member induction. A daughter-in-law comes in, her role, her rights, her son-in-law comes in. And without naming names, businesses which are run by son-in-laws or sometimes daughter-in-laws. So what's the process behind it? Policies, family employment, what will you earn? Will it be a salary equivalent to the designation in the company? So there's a whole host of policies you can define in a constitution. As I said, you can make it as detailed, as short as you want. Depending on the stage of your business, second gen, third gen, fourth gen, fifth gen, actually the constitution will become larger in most cases. Again, handling conflict. If there's a conflict between in the same generation, who will handle it? If there's a conflict between two generations, who will handle it? What kind of communication will go? Will there be an in-person meeting? Now, this may sound like putting too many rules and regulation, but these are something which the family can fall back upon. Yes, you may not need a formal meeting if you're living in the same house. You can meet over the dining table, but if the family is larger and they stay in different locations, it's very difficult to solve conflicts when interpersonal people are not involved. So there are multiple ways of how do you handle conflicts, how will handle media, as I said, transportation and all that kind of stuff. So that will be handled by the families themselves. So this all can form part of the constitutions. So how does it all work? So let's look at the family from left to right. So on the left hand side, you have the whole family, assuming it's a 40-member family in the third generation. So they will meet for family assemblies maybe once a year. This may include grandkids, newly born kids, newly wed, couples, anybody. It can be anybody of the family. That's a family assembly where they might be common events, and usually it's a 2-day event, usually in resorts for large families where the resorts are sometimes booked. I've been lucky enough to be part of maybe 10, 12 of them already. And it's a mix of various emotions for a family. They meet their family members sometimes for the first time in years, sometimes new family members coming in. There's also tension because there are some conflicts we need to be discussed. There are some expectations where new members are coming in. Out of that family assembly, then you forms the association. Now, association are usually the senior member, and you can call them anything. You can call them family boards, you can call them association. There are multiple names you can give. There is no law for naming these. And then you form associations, which is a smaller group of from this whole assembly, which will take either voting or they will form further councils. They will define who goes into the council rather than getting a 10-year-old part of the family assembly, asking him about his view. Doesn't make sense, right? We take a smaller lot and then they create councils. What kind of councils are there? The councils are regarding the business council, which talks about how the family businesses are doing. Are there any issues? Do the family members be told about certain issues, certain challenges, certain problems they've faced? Any good news, bad news? So business council will take care of that. Second council, maybe say the next gen council, which actually is focusing about how the next gen will work. How will they get mentored, tutored? They can be a philanthropy council, where usually in many families, I'm not saying it's a norm, there women of the family come together for the charitable instances, philanthropic foundation, social impact initiatives. So they may actually create a council for that. They may be the school going kids council. It talks about schooling, where they're going for summer camps, and things like that get discussed in those family councils. Idea is the council will look at a particular topic, talk, discuss, and put their recommendation or expectation to the association. Association is the curated group of family members who will then vote or decide upon what is allowed. There may be allocation of resources, allocation of money, time, and things like that, which will go in. So depending on where you are in the intergenerational spray of things, you will decide on where do you require what kind of family governance platform do you require. In the first generation, you don't require much of family business, father, mother, maybe one kid or two kid. You don't require such kind of governance platform, but these are usually required when you go to generation 2 onward. And as you go into generation 3, 4, you do require, because family assemblies are required, councils are required. So this is the reason where family governance platform needs to be built, especially when you go beyond the second generation. And this can actually erode over time the family business if conflict starts arising. So this was all about governance. Now let's quickly switch tunes about the second issue that the family businesses fail is the cause of the family wealth was not handled well. Family wealth was put in businesses, lost because of frauds, because of bad investment decisions, and all this kind of stuff. Now, do remember, the reason a family office exists is because of family wealth. If the family wealth is not handled carefully, it will actually, it cause a lot of problems. A lot of conflicts might happen slowly and slowly. As somebody has mentioned in one of his books, there is a wealth evaporation trap, where slowly, if it's not managed well, distributed well, protected and grown with adequate kind of risk, mitigation, it will have a lot of conflict inside the family. So how does the family go around structuring that investment process? Now, this is, again, this is not a science. It's an art for a family, because yes, there are some proper steps you can take, but it will depend on from one family to the other. They may already have an investment platform. Their CFO may be managing the investment platform for the family wealth. Conflicts will arise with, if the family member comes and says, I don't think the CFO does a good job. He's not a dedicated guy for this. So can we look at having a proper platform for this? So how does the family approach it? So what they will start off with in most cases, or people like us will start off with them in some cases, is they'll start looking at their wealth holding structure. And this is the big exercise. It may look like a small thing, but it talks about how are the promoter shares held, who owns what in the family, are there cross holdings, are there holdings across family members, across generations, what are the SHAs saying in those holdings, are those holdings tax efficient, how will they stand up to the test of time for, if the inheritance tax does come in, or if there are issues around wills. So how is the wealth, which is family business, including the family business, how are they held inside the family? Where is the wealth held, which is outside the family business? Where is it held? Is held in a common pool? Is it held in a multiple pools, multiple entities? Sometimes it used to be held across companies. Every house was bought in a different company for tax purposes. Every car was bought in a company for depreciation purposes. So to understand where is the wealth or assets are being held is the first step. It's followed by the lifestyle of the family. Toughest job to understand, sit with them. What are the expectations of from family wealth? Do they want regular supply of capital for their living, or they're looking for some large expenses in the future, new house, annual holidays, new businesses they want to launch? So what are the expectations of the financial lifestyle of that particular family? Thirdly, cash flow. What are the requirements of family? And sometimes that takes a lot of time, because each individual in the family will be having a different cash flow. They may be requiring money for different reasons. The lifestyles might be different, as I said, and that may also cause conflict. So when you plan, you look at all these things, that as a family as a whole, as maybe a joint structure, these are the expenses of a family as a whole. These are the expenses of individuals, their discretionary spending. Family members can't be treated like kids, that you will get this kind of pocket money. Now if that cannot be handled, then some processes have to be made sure that these are there, put in place. So cash flow planning needs to be done. After all this planning is done for the family, then the whole family wealth allocation happens. Now sometimes you may create one pool, sometimes you may create pool which are across asset classes, you may create pools which are for individuals in the family, or sometimes, in the next generation you have one set of parents and maybe three other families in the next generation, and after that you may have eight families. Do you need risk pool or asset pool structure for each individual, or it's a common pool structure where everybody takes the benefit, and there are rules and regulation about how the returns from that family wealth portfolio will be distributed? Now, people who are in the investment space know not everything can be distributed on day one. There are taxes at play: long-term capital gain, short-term dividend tax, and with large families, dividend tax is a cost as well. So, do you want to buy a car in your name, or the company will give you a car? So you don't need a car expense coming from the family pool. So everything gets allocated to the wealth allocation pool. A proper investment policy document gets drafted. You know, Even for a small family's offices of say 100 crore financial wealth, and right down to large 3 4 billion dollar family offices. I mean, we have structured IPDs for all of them. And frankly, the intent of IPT doesn't diminish by the amount of wealth. Yes, the complexity might change, because for large wealth, you need larger holding structures, more do's and don'ts, maybe a more expansive product suite that can come in because you have large capital available to you. But the basic tenets of investment policy document have to be put in place. If we meet any family the first thing we ask them, if they're talking about investment platform, they've spoken about governance is already in place, is do you have an IPD? Because if they don't have a policy document, chances are things are running like a reactive process. You're reacting to the market, you're reacting from demand from the families. We need 5 crores for a wedding in the family. Now, where is it going to come from? A family pool. There may be conflicts again emanating out of that because that was never planned for. And sometimes taxation may be incidental to that exit from the portfolio. Uh, Chances are investment policy document may be there in somebody's head in that family, either a family member or a CFO who's working, or maybe a team of 2, 3 managers who are managing that money. But it has to be properly documented so that everybody knows what is allowed, what is not allowed. It goes into as detail as, for example, we are avoiding certain sectors in while investing. How will the investment take place? How can they execute that investment process? Can it be executed through brokers or through in-house expert, the talent available directly into mutual funds, directly into PMSs? Everything gets documented in the policy document. And then finally there's an investment committee. uh, Now, this committee is not just a presidential committee. They have the onus of making sure that the investments are taken care of properly. All risks are looked at, planning is done adequately, they'll have voting rights, somebody will have veto rights. Sometimes, in some cases, contrary to what people might believe, when I sit on certain investment committees for family, I actually have the veto right. The family members don't. It depends upon the maturity, seniority, and the kind of people on the investment committee. Sometimes my vote has a single vote equivalent to a 25-year-old family member, because he's also quite knowledgeable in this particular space. So you can construct this investment committees depending on what's best for your family. uh, it cannot be templated. And thirdly, make sure that it is not just a presidential stamp in any point of time. It's more to do with actually safeguarding family wealth, making sure risk policies are made. And talking about risk, now, once you've executed the family wealth and the platform is already in place, executions are happening, everything you planned for, how do you mitigate risk? This is the Achilles heel for most families in India. you know we find very lot of single family offices who hired people from the investment space, good people with good backgrounds. Sometimes they work with advisors in the investment space, and in the name of risk management, what you actually get is nothing but a very basic set of risk management tools, looking at a few ratios here and there. But do remember, when a family manages its family wealth, or they work with people like us, we have to make sure that we know exactly what the family wealth is exposed to, what can affect the family. The ability to have a risk intelligence and assessment process is very important. What can impact my family? Can a falling of Baltic free trades affect my family? Maybe, because if I'm importing something, exporting something, their free trades are part of my cost of my business, or they are part of my European business arm or something. Anything can affect your business, but are they affecting your wealth portfolio? We have to take a very conscious view of that. Optimization and my mitigation. If something is affecting my portfolio, how can I optimize it? Because every risk cannot be avoided. How do I mitigate in some cases? Because some risks are mitigatable, if I can use that word. But how do you control those? Sometimes risks, you have to live with it. You have to sign off on that risk. But the family should be aware of what their family wealth is exposed to. It can be economic risk, geographical risk, security risk. It can be as good as CIO risk, exposure risk, concentration risk. It can be interest rate, credit. It can be as simple as bad products in your portfolio. And somebody needs to highlight those on a regular basis. But hopefully, if you planned everything well, the risk part will be taken care of. Scenario modeling. What will happen if global stock markets crash tomorrow? What will happen? There's a credit domino in the Indian market, where everything beyond AA minus just collapses for whatever reason. Banks don't pay out you cash. Where is your cash lying? What is cash for that matter? You have sovereign gold bonds. Can you exit at any point of time? You have actually got gold. Can you exit? Not exit? Is it a liquid risk for the family? So all that has to be captured in the risk management document for that family. How will the family look at what affects their platform? And then obviously you build on that process. So as I said, from the starting of the process, understand life stage, and I'll skip through these in respect of time. when we work with this, when families also work by themselves, may not always work with advisors like us, but if they work, usually they'll sit down with each family member. In some cases, very honestly, the karta might define, this is my rules and regulation for the investments, and no family member has a say. Now, that's one way of looking at it, because that's the way it works in that family. In some families, it may actually be a way where everybody sits down and has a call. So again, as I said, individual level holdings, pooled holdings, their attitude towards risk, we have to understand their attitude towards risk as well. And this example I give very frequently, that okay, you put a governance platform in place, everything is fine, conflict management is in place. I speak to two brothers in different rooms and ask them, so tell me, you got you just bought a new house, how do you feel about it? Oh, I love it. Frankly, Munish, I love real estate because it's right there, it's physical, I can touch and hold, nobody can take it away. No event can happen unless there's an earthquake or something. But the other brother says, you know what, Munish, it's so risky to have a house because I can't sell it. There is a liquidity issue. Tomorrow there might be issues regarding somebody just gate crashing into my house and taking ownership or possession or whatever the case may be. I have to put somebody to take care, a security guard there. So perception of risk can also change. Uh, as I said initially, and I'm reiterating now some of these points, holding structure, how is it held? What kind of companies are used for? Taxation wise, how can they be transferred to the next generation? Are they transferable easily? Or will there be an impact cost? How do you do that? If I transfer a house from one person to almost like a selling process, there's a stamp duty. If I transfer ownership rights of a house through a company structure which owns that house, I just have share ownership changes, which doesn't have stamp duty. So how are they structured in the holding process? Again, as I said, risk pools. Family may have very different risk pools. For example, there may be some part of the pool which may be used for emergency capital. Some part of the family pool may be used for, the absolute opposite. They want to create more wealth of it. So they may actually have a risk pool for investing into venture capital to grow that wealth. And there may be a risk pool for general sustenance, that, my lifestyle should be taken care of. As I said, investment policy document, very important. No family should miss that. Uh, Risk management, I told you a few things about it, but let me close the part on risk here and now. And this slide I have taken from somewhere, as it may be evident, but I love this slide because it puts a lot of things in one page. So everything is about investing is risk and reward. We all know that. We tom it every kind of seminar. But things is, do we know the kind of risks which are there in the family portfolio? Chances are most of the time families don't even know the risk that they're being exposed to. I'll give you an example. Till around few years back, just to give an example, FMPs were supposed to be the most safest product. Yes, only because of interest rate risk being catered to, because it had a maturity defined. Hence, it won't go up and down depending on interest rate movements. But do you know there's a huge credit risk involved when you're investing in FMPs? So if you tell me that's the safest product in the market, it's wrong. But many families don't even know that. So actually, when people like us sit down with the family, we actually break down their portfolio and understand each kind of risk which might be there. As I said, business risk to the underlying investee companies, market risk, because your business may be very good, the market changes or this demand changes. Credit risk there. I mean, usually, defaults happen because of underlying investee companies going down. Sometimes there's intercorporate deposit between families which goes down as well. Liquidity risk. That's the most underrated risk. You have a lovely portfolio, but tomorrow you need emergency money and you can't get it out. I mean, then you borrow at sometimes exorbitant rates. I've seen families borrowing short-term money. But things are that these are risks which have to be catered to, interest rate to, regulatory risk. And I've still not added the global part of it. The global event risk, risk of, security issues, risk of socioeconomic issues, risk of political issues. They're still not there. But I'm saying you need to have that process in place, and IC has to be, for example, people like us do something called risk management committee meetings every quarter, and they run for 2 to 3 hours. They have board notes, board meetings for a family office. These are very detailed things which get done. So idea is that you've done good governance platform, you've done good investment, and done executed some lovely products that have come your way. You make sure the products are good. Family office advisors like us or the single family office teams themselves, if they're able to, can manage, plan for the portfolio, pull products from the market at the lowest cost, investing directly. But if they don't look at the risk management side of things, they may actually miss out on very large events which can affect their stuff. And we go down to the level of risk in each and every product in their portfolio. People might say, what will change in a product in a matter of quarter? I think things can change overnight in a product as well. So there is no less emphasis that can be put on this stuff. And then obviously, goes without saying, in the risk part of it, you will have multiple decisions to be taken care of. For example, in equities, how do I plan? What products do I use? Do I use internal managers? Do I use external managers? Many advisors like us sometimes hire equity managers to manage money, but is it good for the family? Because family wants exposure to the best managers in the market. Does it make sense to take the money, or the single family offices sometimes hires a fund manager internally and they will manage the whole equities part? Then again, you're doing injustice to your wealth, because you're not exposed to the best minds in the market. You don't have diversification of CIOs. Things like that get discussed. Things like private equity, venture capital, all these things get discussed in the investment policy meetings which happen on a quarterly basis. So it's a quite a detailed platform which gets built in. Just having a few people managing, creating an Excel sheet, or a coming up portfolio by doing basic asset allocation for a family actually is not something which families manage money across the world. uh, Families may start with smaller amounts of 75, 100, 200 odd crores, but the chances are they will create wealth over generations. And if the foundations are not strong, every time they'll have to cater to it. Classic examples are when entrepreneurs sell their businesses. Suddenly they get, say, 600 crores. The whole wealth management community comes to them and start, knocking on their doors. Things are, they were not planned. And if ever they were planned, they had planned about what will I do with the money. They never started from right from the start. Where is the money held? Where will the money come to? Is that holding structure correct? Then what is the need of that money? Some has to be segregated for safety. Some has to be segregated for further serial entrepreneurial intents. But what kind of risk will I take? Will I start my own business? Is there a separate fund for that? Or I want to support entrepreneurs. If I'm supporting entrepreneurs, do I go into early stage? Do I go into late stage? Do I go through funds? So all this is part of that platform which gets built in, and this gets reflected in the investment policy document for that family. It may be a family or family business owners, or an entrepreneur who just cashed out and is a serial entrepreneur. And obviously, last but not the least, the families will decide whether they want to have their own single family office or they want to join a multi-family office. If the portfolios are large enough, then all your governance activities, some internal, some external, can be managed by the single family office. They can create those structures if they've got good people on board. Hiring talented people is always a channel for single family offices. Um, if they can afford it, it is costly as well. I can tell you, for a large family office today, a CIO will cost you anywhere between 2 to 5 crores. So unless you're a 1,000 crore family office, chances are you may not want to have that kind of a cost. So then people look at joining multifamily offices. But there again, you have to be very cautious about, is the advisor really an advisor? Is he trying to say that he's an advisor but trying to sell their own products? Startup deals and funding deals where they're making out money. SEBI has now made it very difficult for distributors to have a garb of investors, but families themselves have to be cautious as well. And if anybody of you are working in an advisory firm or want to work in an advisory firm, now they have to take a proper choice. Would I be an advisor taking a fee and advising these families and entrepreneurs, or I want to be a distributor where I just want to distribute products? That's the one part of the platform which gets handled for the family, which is the last choice. Sometimes this whole managing of governance, managing of the investment platform, governance platform, risk platform gets managed by the multifamily office themselves, because the advantage MFOs have is because they work through multiple families, and chances are they've already catered to those problems in some other family. And also, governance and investments have very close correlation. For example, if a succession is happening and there will be changeover of shares, we want to construct the investment platform in a way that when the succession happens and one member of the family gets majority responsibility, some other family members may be given out pools of capital to become entrepreneurs themselves. They have to be managed much in advance. So it goes hand in hand. You can't just be a governance expert individually. There are very good governance experts out there in the market, with due respect to all of them, or they are very good investment managers. Sometimes families may work with multiple of them, sometimes they work with one, which can cater to all the needs of a family office. It's the family office decision or the family's decision that needs to be taken. So I'll stop here because I think there's enough time and we need some time for questions as well. But this space is quite large. The more reading you do, more you'll realize, the family business owners and serial entrepreneurs have a big challenge on their hands when they are, planning for themselves. And family businesses, even more so because as intergenerational changes happen, chances of conflicts keep on going higher and higher. So these are the broad things I wanted to maybe share briefly with you guys. And honestly, we can do a couple of sessions later on, but what we can do is maybe take questions. Aditya, anybody from AIW, Aditya, I can see you there. We can take questions which have cropped up. Aditya, you there? Anybody from AIW? Am I
Yeah, yeah,
there?
Munish.
Yeah.
You want me to take the questions for you?
Yes.
Just a second.
I'm sorry. There is one question which came in. I don't know why this lady messaged on the WhatsApp, but it propped up on my desktop WhatsApp screen. What she's asking, her name is Nehal. She's asking that is it that a family office has to work with external advisors only, or can they do it internally? Now, as I said earlier, if you have individual people who are experts in this space, who have experience, it's not expertise but experience in this space, if the single family office has it, yes, they can. But I usually recommend that if there are very serious conflicts in the family, reach out to experienced family business advisors which are out there in the market, who got experience in that space. Some are from backgrounds of line management, senior, they're ex-CEOs. Some are head of HRs of large corporates who are now doing this business, who are helping out these families. There are individuals like us who've just learned this over working with certain families over past many years. So you can choose that. If you work with an advisor, the benefit is that you work with advisor is not truncated by the number of people inside the advisory firm. They can work with any advisor in the market as well, depending on the need to that for that purpose.
Sure. So I'll
Thanks,
read
Mita,
the,
for your words, kind words, Mita. I'm
I'll,
just looking at the chat.
you want me to
It's
read, Munish, or you are taking them directly?
I'll take it directly. I think if I can, beneficial that way. So it says, I'll take first question. It's too many of them. It's an eye opener for search bar. So thank you so much. What is the basic organization structure in a single family office in the initial stage? Very good question, because that's where the mistake comes in, Deepthi. Uh, there is no defined template. It depends on the complexity of the family wealth, size of the family wealth, and what functions are to be done internally and what functions are to be outsourced. In some cases, the smallest teams are just a CEO of the family office and maybe a finance and accounts and operations guy. The investment is outsourced to a team of experts advisors. Things like governance are handled by the family governance experts. Things like legal aspects of ownership is handled by lawyers. The CEO of the single family office does all the knitting together of or stitching together of all these functions. This is one set, and other set you may actually have in the initial phase itself, a senior investment guy, a couple of investment guys in place, a senior operations and finance guy looking at the family office, all reporting to the family members. So it's actually, there is no common brush we can brush with. It all depends upon the need. So when we actually sit with the family, we spend almost or 2-3 meetings understanding the need and what structure should they have internally, externally, or completely internally. I think that's a question which gets asked once we work with that family. um, it says next is from Viresh. It says experience, deep understanding, thank you. What are the regulatory and compliance requirements for setting up a family office? um, as an investment advisor, you report to SEBI or whoever will be the new self-regulatory organization which is getting built up. But you need to be an investment advisor. The new guidelines for investment advisors, and this is for the investment part only and not the governance part. Governance is more on experience play. You can do a lot of courses, but ultimately it's all to do with experience. And there are the worth of most advisors is because of the experience they bring in on the family governance and the family business side. Uh, the only requirement on the investment side is you need to be a investment advisor. Your only fee can come from fee from your client. You cannot take any brokerages or commissions and all that. That's the only regulatory thing that you need to do. Setting up my own family office, multi-family office. For me, I say it's not me. I think it's the team of people that you can put out there. You have good set of people who can come together and set up that office, who have experience. And as Aditya was asking in the initial part, our logo says expertise, experience, and integrity. So if you can build a team around it, I think you can be successful. It is just that it's such a nascent market in India. Um, People like me have been in this space for 8 years, dedicatedly in the family office space. But out of my 27 years experience, that 8 years is a very small part. 19 was spent in working in private banks and wealth management firms and all those kind of entities. So there are too many people on the distribution side as of now, because you need to be really be able to create that niche for yourself with expertise and experience if you really want to make your business effective. Do family, Mita is asking, do family members go through a training to hold family councils? Mita, frankly, and you would know it as well, is that it depends on the family. So what is experience? My experience has been that initially the first 2 or 3 family councils meeting I was invited to, just to make sure things are a bit more formal. There is proper recording of minutes, what has been talked about. Because the first meeting, the talk was all about food, weather, and all this kind of stuff. Because people were just happy to be meeting in a proper, curated space. But I think as it becomes more formal and they start seeing the benefit, they themselves then start working in a very clean format. But you have to handhold. And frankly, our job as advisors sometimes is to probe and probe and probe. If it's not working well, not working well, talking to a family member saying, did that meeting go through well? And the guy says, no, yeah, there's too much wasting of time. Last 15 minutes were effective. So can we share this meeting in the next family assembly and make sure that the family members make the meetings or family councils much more effective in that space? There is talk which says, will a family trust be a solution to this complex problem a family might have? You know, very honestly, when we talk about succession planning and estate planning, the first thing we think of is a trust. Trust is only one of the options. Trust, the benefit of a trust can be because of inheritance tax, estate duties, not applicable to anything which is held inside a trust. But trust may not be a solution for everything. uh, for example, you need to have a determinate trust to be having an effective umbrella against estate duties and inheritance tax. Now, if you put everything in a determinate trust, you cannot take anything out of it. It's very difficult or almost impossible to take it out. So it may not be the best solution if you're doing investments which have to be constantly bought and sometimes sold, sometimes transferred to somebody else. So it depends on the need of that family. Trust is only one of the solutions. So, and family trust forming is not an issue. I think once the family decides, and this is internal to the family, about how their wealth should be held internally, then they will talk to a tax expert, a legal expert will come in. Everything is not provided by either the family itself or the advisor. Advisor like us sometimes actually reach out to very well known lawyers, sometimes chartered accountants, to make sure that the strategy we are building is kosher and can stand test in time. Those things get checked out. So trust is the execution of the plan. It's the last stage that we do in that process. Um, when should one start planning process for a young professional which has started his professional career and is yet to create substantial wealth? Frankly, the tenets of investing are the same for a large family office and for an individual, Samir. And Samir, to be very honest, the basis of investing regularly, I mean, nobody can tell you much more often. It as much said is better that start investing early, make plans, make sure asset allocation is proper, understand the risk in your portfolio. The tenets remains the same for an individual, and you may be an entrepreneur, you may be professional, but chances are the process remains the same. It's just that the magnitude of wealth changes the nuances a lot. So you can have basic tenants in place, but family offices, for example, they will not have one asset allocation. They'll have different risk pools. Akin to maybe an individual investor who may have just one asset allocation in most cases. So this may happen over a period of time and not just at one go. Uh, Anchal asks, since different members have different risk appetites, how can those personalities be brought together? Very good question, and the biggest problem in creating the investment policy document. Sometimes it takes us 6 months to get a sign off on the IPD. The reason is, as you rightly said, very different risk appetites. So you have to decide that either it has to be a democratic process for the family, or it has to be an autocratic process for the family, which is top down, where sometimes the karta of the family says, you look, till the time I'm alive, this is the common pool of capital, it will be managed like this. When I'm not there, you can always manage it externally. But it will always be a decision of the family. You can only be instrumental in creating an environment of discussion, but ultimate, and you can give your recommendations depending on the understanding. If there are stark differences in the risk abilities or risk appetites, we generally suggest having different risk pools attributable for family members. Even if there's a common pool, then split that common pool into sub pools so that the risk appetites for each family member can be catered to, but it will never be able to cater to in large families. Every member will have a different concept of risk. So sometimes it's a kind of a compromise where you have a common pool of capital run by the karta, and then there are secondary pools of capital run by factions of the family depending upon their risk appetite. So it's a journey. It's not something which you can start from day one. You can start from a one structure at the start of the year, and 5 years hence, actually you find your optimal structure once you have gone through this journey of 5 years with that family. Um it says, can there be a synergy between distributors and multifamily offices? Obviously, multifamily offices don't produce their own products, because if they have their own products, there's a huge conflict of interest. You should have your red flags up. And distributors are people who bring products to the market. So I think multifamily offices take only products from distributors. The only difference is the multifamily office will need to invest at the lowest cost expense ratio for that product. And in that option, the distributor may not end up making money. I think that's the only challenge which multifamily offices do have. Uh, I think just one last question we can take. I'll just scroll up. Will estate tax be introduced? I think I'll skip with Neeta's question on this. Every year it gets discussed for my 20 years. Will this come in this year? Estate duty, inheritance tax will come in. We don't know. If it comes in, it may come in with retrospective effect. That means, like it happened in UK, that if you have set up trust in the last 7 years, it will not give you any benefit, because taxation will be impacting anything which was owned by you in the last 7 years, even if though it was transferred into a trust. That's a retrospective effect of an estate duty tax. So we don't know. And frankly, I've tried doing a lot of research in this space of how it was introduced in different companies. Very difficult to say, but you need to be sure that we are still an emerging market. We're not a developed market, and businesses are still in the first, third, fourth, or fifth generation at max. So generational wealth and taxing the generational wealth usually is a space which developed markets usually get into, and not emerging markets. But tomorrow, if the government has paucity of cash, can they do it? It's almost equivalent to saying, can agriculture be taxed? I don't know. It's a big political issue, so let's comment it and more so. Uh, Aditya, I think should we take up one more question and close it, or
Yeah, yeah, no, entirely your wish. You have. Let me check if there are more questions. Um, I'm not sure.
so maybe I can take one question from Samir, I think, and then we
Yeah,
can close it. He's
yeah.
asking that preparing the constitution, IPD, and documents is a good start, but how do you ensure execution in spirit? It's very easy. As I said, these are not legal documents, so you can't take them to court. Uh, Even the biggest businesses who had letter of wishes, and again, with due respect to some families, like say the Hinduja family, we saw a lot of things out in the public. They had a letter of wishes document. They had very detailed document, and you know, about how ownership will happen, how equivalent ownership will be there, how can one not sell family silver and all the stuff. But struggles or conflicts do happen. The best way is that to make sure that every document which gets signed off has an ownership and approval before it gets signed on the dotted line, and everybody understands what the need of the document is. If the family members don't see the need of that document, frankly, it may be just a piece of paper at the end. Ultimately, we have to tell the people that what benefit are you getting by putting either a family constitution in place. We share a lot of case studies with those family members, and many times the reaction is, but in our family it cannot happen. True, it may not happen like that, but the only issue is when it does happen, you are left unprepared, and then you start thinking of what if I would have done it. So it's, I think we, our job as advisors is also to bring into for that this can happen. This part of risk, right? What is risk? Not knowing what can happen or what can affect you is risk. And this kind of a bit of a forward vision is something we have to give. And if that ownership comes from the family members themselves, frankly, that piece of paper actually has less value as compared to the ownership the family members have. No, no, we need to have a constitution, because in constitution it's written that when I interact with my driver, I will have to treat him with respect, because that's part of the values of the family, and the next generation then learns from it. So I think that's more to do with acceptance of that document for the family, rather than anything which is written, stamped, or thumbnailed, or whatever you want to call it in that way.